No, I would
Good
assume.
afternoon, everybody, or good morning, everybody. Welcome back to the Opportunistic Trader. It is December 18th, and we're joined now by Phil Flynn of the Fox Business. He's a Fox Business contributor and Price Futures Group. How's it going today,
Hey, I'm
Phil?
doing good. I'm doing good. I mean, hey, there's green on the screen on the Dow. Oh my gosh, I forgot what that looked like. It's kind of looks holiday-ish, green and red, red and
Well, that's what
green.
we're used to seeing in December. December is
Yeah,
typically an up month, and as of yesterday, we were down over 8%. Russell was down over 10%. Worst month worst December since you had to go back to the 1930s. So, what's your take? What are you hearing?
really. Well, I obviously the mood has been terrible, and there's a lot more questions and answers. And are we in a late cycle? Are we going into a deep recession? Um, why is the market mood so bad? Is it about the trade war? Is it about rising interest rates? And to be honest with you, I think it's more fear than reality. And I think a lot of what we've been seeing has been based on fears because of unanswered questions. Um, I'm hopeful that we can find some stability after we get some of the answers to these questions, mainly the Fed meeting tomorrow, which I think is going to be probably the most important Fed meeting in recent memory, because it's going to be up to the Fed to basically restore confidence in the market, let them know that they're not panicking at this point, and to send a message to the market that they're not going to be too aggressive on raising interest rates, and they're going to listen to the market. And I think that's what we're going to kind of wait and see. Up until then, anything can happen, and probably will.
So let's go over that. You're talking about the Fed. It's a big catalyst, probably the last big catalyst before the end of the year. What are the different scenarios? What do you see playing out, and what do you think the different scenarios are for that?
I think the market is raising concerns that the Fed won't raise rates, even though the Fed fund futures are saying quite clearly they're going to raise rates. But they're getting a lot of pressure, not only from the volatility in the market, but also from President Trump. President Trump was quoted as saying, "Feel the market, feel the market." That's sort of like the movie Caddyshack when they were saying, "Feel the ball, feel the ball, or be the ball." Um, the president saying, "Look at all the market turmoil. Well, how can you raise rates with all this madness in the marketplace?" And there's some people that agree with the president. Druckenmiller, the multimillionaire billionaire investor, was saying that the Fed shouldn't raise rates today. There's other people that are saying that the Fed's crazy for raising rates, especially with all this turmoil. Druckenmiller was saying, essentially that raising rates right now at a time when businesses are really stretched when it came to investments shouldn't be raising rates, and it can cause a lot of problems. So I do think the fear of raising interest rates is something that has to be addressed. Now, we also had one of the Fed officials come out and say maybe they'll put off an interest rate increase till January. But at the end of the day, what is that going to say to the market if the Fed does pause? Is that a signal that things are really bad, and that if the Fed can't even raise interest rates a freaking quarter of a point to stop this market turmoil, that things must be really lousy? So I think it would be a sign of weakness if the Fed changed course at this point and not raise rate, and it might do even more damage to the market than goods. So I think what the Fed needs to do, and probably will do, is raise their quarter, send a message to the market that they think they're near neutral, and that sound a little bit more dovish as we go into the new year. But whatever scenario happens, I think whatever it is, the worst is going to be over shortly after the announcement. If the Fed, chickens out and doesn't, raise rates, I think the market will really tank hard. But then it'll probably find some support because the people will say, well, maybe the Fed's going to be a lot more stimulative and we'll find a bottom. If, on the other hand, the Fed raises rates, there will be a little more turmoil, but it is as expected. And then the market will start looking forward to what the statement's going to say. And the statement's going to say more than likely that the Fed's going to be a lot more dovish going forward, or at least more sensitive to the market situations. So my gut feeling is whatever happens, it'll probably put a bottom in the market. It's just, the big question is whether we get a big sell-off right after the announcement. But I would say whatever it is, I think Wednesday will be a turning point for the market. And then, of course, we'll get a little bit of a rally after the announcement's out of the way.
Do you think it might be a good opportunity? There'll be some short-term gyrations back and forth, but potentially after Thursday, maybe even, after Wednesday, potentially Thursday, looking as an opportunity to buy into year-end, which is typically, seasonality-wise, a very good market environment, typically.
Yeah,
December.
I think seasonally and technically, it should be a really good spot. I mean, you have to be aware, obviously, of the extreme volatility. And so you might have to be prepared to take a little heat. But you usually want to start buying when everybody's selling. And that's where we've been for the last couple of weeks. So I think that is an obvious turning point where we should start to find some support and go higher.
Yeah, no, that makes sense. Now, what about the energy markets? We've just gotten crushed since the last few months. We were trading above $75 up to $77, and here we are at the low of the year, traded at 48.13 in Feb crude. We're right now trading 48.83. We have API data later, then DOE data tomorrow. What's the story there, and what are you looking for?
I mean, there's obviously a fear in the marketplace that demand is going to fall off the map. Now, it's interestingly enough, if you look at the U.S. demand numbers for total products last week, it was an all-time record high. Well, actually, we set the all-time record high in January. We missed it by about 20,000 barrels a day. It was nothing, and we're seeing demand in China. But the Wall Street Journal, of course, is pointing out to the fact that the International Energy Agency said that stocks in the developing world were 5.7 million barrels up in October. That puts them at 2.872 billion barrels. It was the first time commercial inventories were above the 5-year average since March. Well, and while that could be a big deal and it could be a sign of a slowdown, usually in October, we see inventory start to rise, because October is the slow demand period, and that's when you usually start to build supplies ahead of winter. So to see supplies build in October and get back above the 5-year average is shouldn't be that big of a deal. I mean, it's somewhat bearish, I guess. But if you really analyze it, being at the 5-year average, when you look at the supplies or the demand, at least currently globally, which has been above the 5-year average, at least in the major consuming countries, the United States and China, it's not that much of a cushion. And they're not taking into the account that, of course, OPEC is getting ready to cut production. I think some people were doubting that the production cuts were going to happen, but doubt no more. The tanker tracking firms that we're looking at right now seem to be suggesting that we're already seeing a big drop in U.S. inventories or exports to the United States from Saudi Arabia. So that's already happening. And Russia, despite the talk of their production rising last month, is sending a signal to the market that they are taking steps to cut back when it comes to production. Normally, Russia takes a little bit longer because it's cold there. They have specific oil companies that they have to adjust to. So that definitely is something that we're going to see change a bit. So I think there's going to be very good compliance to the production cut. And nobody seems to be concerned about the fact that Libya's oil production has been offline for a couple weeks now, and that there's been a political situation that has cut off that supply, and it doesn't look like it's going to end anytime soon. And nobody seems to care that Venezuela continues to see their production decline. So all the things we were worried about, the Iranian sanctions that didn't happen right away, all those things are still going to happen. But, the bottom line comes down to this on oil. Is the global economy really slowing, or are we seeing a market event where we're just seeing a big correction in the market, the stock market, and the actual underlying economy isn't slowing? That's the big question. If we're not going into a significant slowdown, we're going to be undersupplied in oil in a couple of weeks. We're not going to have enough oil, unless we see a big drop off in demand. It's just, we're just going to see inventories really drop. On the other hand, if we are getting into a big slowdown and the economy is slowing, then we don't have to worry about an undersupply because demand's going to sell off and take care of that undersupply. So
right now in the actual where we
Yeah.
actually are, you think that we're going to have a problem with actual supply?
Yeah, if the economy isn't as bad as the market seems to be indicating, we're going to be undersupplied by the global market. If you look at the global consumption on a daily basis versus the actual production numbers that are going to fall, think of how much oil that's coming off the market here. Okay, you've got 1.2 million barrel cut from OPEC and Russia, right? You have a cutback in Alberta of 360,000 barrels a day. You have an output cut from Libya. You have a force majeure in Libya, so you're costing another, say, 500,000 barrels of oil a day, right? Then you've got Venezuela, whose production hit the lowest level we've seen in over 20 years. So we're seeing a lot of oil come off the market. Everybody's saying, well, look at the shallow oil guys. They're going to be raising production. They're not going to be raising production with oil prices at $50 a barrel, let me tell you. We're already seeing the last 2 weeks, U.S. rig counts have come down pretty dramatically. I'm talking to people in the shale patch that are going to be shutting in rigs. Talking to the bankers that lend money to the shale producers. They're not going to be writing any more checks unless we see some stability in this marketplace. So this perception that, the shale oil guys are going to just keep producing no matter what the price of oil does is not fact. And we already learned that in 2014 and 15. Everybody was saying, oh my gosh, oil's at $26 a barrel, but these guys can produce at $10 a barrel because they're so much more efficient. BS. We saw bankruptcies. We saw CEOs of shale companies get fired. We saw production fall. We saw rig counts fall. We're at that point right now. If oil prices go down, more rigs are going to come off. We're going to see more bankruptcies. Just the way it is.
Well, that's the exact question right here. If we hover between, let's call it 45 and 52, are individual companies going to have problems?
We've already heard of one bankruptcy this week, Chapter 11 from a pipeline company. I think if we stabilize here, we're going to be able to adjust to a large degree. But make no mistake about it, you're not going to expand. You're not going to get the bankers to give you more money to put in more rigs, especially after the dramatic drop that we had. Stable prices are good if we can keep them stable. The problem is we haven't had stable prices. We've had wild volatile prices. I mean, we talk about $48 like it's the norm, but it's a rare occurrence. We've been here for less than 24 hours below 50. We've been above 50 for the last year and a half.
Yeah.
So, and who knows if we're going to be below 50 by the end of the day? We don't know. And so that's the problem. The bankers do not like this kind of volatility, especially when we've gone straight down. So they're going to be really tight with their money.
Yeah, absolutely. What about anything else that you find interesting into year end, as whether it be people are talking about, what was interesting, I mentioned before, yesterday on the equity side, back to the equity side, retail, healthcare, consumer discretionary, and utilities all underperformed yesterday. And those are the sectors that have actually outperformed for the year. And so I don't know if that's kind of the suspicion that, Larry mentioned, I as well, that, rotation, taking profit on the things that have worked, getting ready for next year. Are there any sort of themes that you're hearing into year end, whether it be large kind of buy, sell sort of programs based on the sector or names, things like that?
What we've been hearing is traditional risk aversion type of things. I mean, in yesterday's market, we saw, the yield on the 10-year fall again. We actually saw some bounce in the precious metals. As far as sectors right now, everything's been beaten down, so yeah, I mean, people are definitely, going to the sidelines. There's fear coming into the marketplace. There's a lot of people that are, that are not going short. I think you're seeing a lot of profit taking before the weekend. Having said all that, maybe the profit taking in the utilities that have outperformed in some of these more calm stocks might be a signal once again that we are close to the bottom and that this Fed meeting will be a point and maybe time to start getting a little bit more aggressive, which add into your portfolio with some aggressive stocks. Maybe, like I said, if you don't believe we're going into a global recession, then we should be buying energy stocks down here like crazy, right? And they really got beat up yesterday. Again, like I said, I think the next 24 to 48 hours is going to be extremely critical for these markets. We're either going deeper into the abyss, or we're very close to the bottom. And I think the Fed meeting is going to be that turnaround point for a lot of these stocks. So my bet is I'm more optimistic. I think we're getting to the point where we'll be a bit more aggressive for some more of the aggressive names. But you got to be careful because this is going to be a wild ride no matter what happens.
Yeah, for sure. I mean, we're seeing volatility here. VIX is trading 24. When we have a 24 VIX, yesterday's price action, we had about a 70 point move in the S&P. Last year, the biggest drawdown in the S&P was 3% for the entire year, 12 months. And yesterday we saw just about a 3% move. So
yeah, it's crazy. So
put that in perspective.
People are not used to this. They haven't seen it for a while.
Yeah.
So.
All right. Well, thank you very much.
All
That's
right,
Phil
kid.
Flynn,
Thank you.
Price Futures Group, Fox Business Contributor. We appreciate it as always.
Right.
We'll talk to you later.
Thank you so much. Talk to you soon.